because we were so aggressive and we were still abundant, it then turned into a killer situation that begat a lot of awesome opportunity for us very quickly. Chalk it to timing, whatever, but we got the timing because we were playing when nobody else was.
What is up, everybody? Welcome back to the Real Estate Investing School podcast. This is a Real Deal series, and this is your host, Brody. Today, I'm joined with guest Ty Thorne. What's up, Ty? How are you, man?
Oh, good, dude. Happy to be here, man.
Good, dude. Well, we're stoked because this is one of the fun things that I do. Get to dive into a deal that somebody has done. You have done lots and lots of deals. We're just gonna pick one today, and we're gonna talk about the ins and outs of it. It's the best way to learn. It's the best way to feel kind of your repertoire of all of these different strategies and how you can, pull from that tool belt when you need it. You know how it goes. So we want to just kind of dive into what you've done, how you've done it, to kind of learn from it. So with that being said, give us a quick overview of the deal, and then we'll dive into the nitty gritty. What is it? Tell us all about it.
Yeah, so the deal I kind of just figured I'd share with you. I think it's a cool one. To me, I love deals that like combo and develop into bigger things and perpetuate. So this is a commercial deal that did at the beginning of COVID, 2020. So it was in like historically the worst time ever to get into retail space. Everybody's panicking, yada, yada. The banks, everybody's like staying away from it. The whole world doesn't know what's going on, but we had an opportunity, kind of short list from a banker, pre-foreclosure on a property really, really close to us. We knew the site like really well. It's like 5 minutes from my house. And honestly, we'd never done a retail space deal before. My team, like we'd done one office building, but like this retail space, never done anything like it. But kind of, you talk about this all the time. If you can get creative enough and the numbers make sense and you get it for the right scenario, like you can explore some new stuff. And the bank literally just said, "Hey, look, dude, we don't care. Just make an offer. We just need to get rid of it." And this property originally was built for like $125 a square foot. It's 12 commercial units. It's leased. It was 60% occupied when we put an offer, and we were just like, frick, $47 a square foot. And the bank's like, done. So we're like, well, yeah, that'll make sense for us. So, we send it, felt that we knew the area, we knew the local businesses and all the small business owners in the area, that we could get it occupied pretty quick, regardless of what's going on. It's a really conservative area. We didn't really think the shutdown would affect it as much. We were right. We had it 100% occupied in the first 3 months. We got it reappraised. It appraised about $1 million over for what we got it for. And that deal begat a deal, like a raw land deal, about 2 minutes away that we didn't have to use any new money to get. So like total, it created like 1.8 in equity, like in 18 months, really quickly between the two little combos. And we kept the cash flow the same as we refied it out. It was a killer deal.
Wow, dude. Okay, cool. There's a lot to unpack there. I love it. This is obviously a home run deal. Maybe not for you. Maybe this is like a single for you, but I consider this a home run deal.
For us. So. Yeah, it was a great deal for us.
No, dude, so I'm excited to unpack it, because I think this is different than what most people are hearing with like, oh, single family house, this, that, and that, right? With that being said, as we unpack this, what are your thoughts really quick on, because obviously you do things big, right? When I say big, like I feel like that's just one of the principles you live by, is like, hey, I want to think big, I want to do big things, I want to go big, and you have this belief system that like you can actually go do those big things and accomplish those big things. And I think there's a lot, like knowing you really well, I think there's a lot that kind of leads into that, right? But for the most part, what's your advice to somebody who's like, oh, they're listening right now and they're like, okay, we haven't dove into this, but right off the bat, Ty's talking about this deal that he created, $1 million of equity that led into another $800,000 of equity really quickly on another property. Like, I'm not there yet. I got to work my way up to that. It's going to be a long time. I'm going to kind of zone out because this doesn't apply to me yet. What do you say to that person?
I love that. I literally had this conversation with a buddy, that exact convo last night. And my answer is always exposure. You you think maybe because you did a little single family deal or something that a deal that size with those numbers is going to be in direct correlation to the difference of size and the difference of technicality to the deal you've done. And it's just not true. And I feel like so many things in life are that way. You go and you get crazy amounts of exposure to people that are executing at whatever level that kind of hurts your brain to think about. And they're just the same humans as you. They're like
Yeah.
when you meet these people and you humanize that they're just shooting bigger targets, like they're not crazy smarter or like have extra hours or all these crazy like secret hacks. It's just that exposure builds, I feel, just a lot of risk management and understanding and just teaches you to think bigger inherently.
Yeah, dude. I think I love that. I don't even remember I heard this, but I don't even know where it came from, but essentially this guy, it was some book probably that I had read, but basically this guy hires this other company that's doing really, really well in his same space, and he wants to go consult, from the guy, spends a lot of money, I don't know, $20,000 for like the day to go shadow this guy in his company, right? And he comes back and he's telling his buddy about it, just like it was crazy. Like the guy showed up late, he came in this, I didn't learn anything I didn't know. And his buddy was like, man, that sounds like the biggest waste of $20,000. And he's like, no, like it was the biggest return I'm going to get, because I realized that guy does exactly the same things that I am doing or can do, right? In fact, I'm doing better than him, so I deserve better results. And so he's like, that was worth $20,000 because that changed the way that I now viewed things and the way that I go and take action and do whatnot. So kind of a different answer than I was expecting, but I love that exposure. That's such a good concept there.
Yeah, like just on what you said, that story, you think the accomplishments like equal the people, and it's like, dude, it's the same imperfect human beings, and when you meet them, I go to stuff intentionally all the time, not even to learn, just to say like, am I good enough to do what this guy's doing?
Mm.
And sometimes I go to stuff and dude, I get my like ego checked hard. I'm like, dude, these guys are unreal and they're doing crazy big stuff. I'm like, well, shoot, who do I need to be to be this person? And it's like also as good of a value add to myself.
Yeah. Yeah, dude. So good. So good. We could do the entire podcast on that topic right there, because I think it's so powerful. Okay, back to this deal. Where did you find it? How did you find out about it?
Yes, it just kind of our normal relationships where we always are looking and we're on short sale lists and these commercial deals. Um, a lot of these come from brokers or bankers because in the commercial multifamily stuff, it's you're really buying businesses that are just attached to physical assets. So they're looking at the profits, the top line, bottom line of these businesses, and so who finances these banks, right? Like, and there's different financing and structures that are involved, but we get a lot of our best deals from the banks we use in all of our other businesses or all other deals because banks aren't in the business of holding the assets. They want the loan. And so if they know that there's an opportunity to pair those two, like they want to put it in people who can finance, like can pull it off. So it just came from a bank.
Yeah. Yeah. Cool. Awesome. Yeah, and we could definitely dive deeper into that and how you get those relationships and all that stuff. I think that this is one thing as we, get deeper into the commercial world that is different, right, than the residential world is like if someone knows that you can close and you can execute and you kind of build that reputation, guess what brokers want to do? They want to bring you the deal because they want paid and they want someone's going to execute and not waste their time. And so, yeah, there's a lot there for sure, but love it. So
Mm-hmm.
it came from a bank. They want to sell it. I love how you pointed that out. They're not in the business of holding it. So it's like, hey, let's create this win-win scenario. Let's get rid of this thing. And do they come to you saying, hey, this is the existing price? Or do they come to you saying like, hey, what will you give us for this? Like you mentioned that, you got it for, I think, $47 a square foot. Like, what does
Yeah.
that mean? What was it listed at? What did you buy it for?
So it wasn't listed. The bank really didn't want it, and rightfully so. It's COVID. So if you guys can kind of refresh now, looking back, we all have a lot clearer eyes. But like in 2020, as we're entering this, nobody wants retail. Like there's mandates and shutdowns
Yeah.
everywhere. Mom and pop businesses are freaking out. Like nobody wants to touch this space. Nobody knows how long it's going to be.
Everyone's
Like
going to be
there's
working
so
from
many.
home forever. This is
Yeah.
everything's changed now. It's not going to go back.
There was just all this
Back, dude.
uncertainty, and the bank, like they didn't even come with us with like, hey, a price. They literally came to us, said, hey, we've got this. Cause we were looking at other deals. Like we were in talks
Mm-hmm.
about some other stuff that we were doing already. And they just like dropped it on our plate kind of in the combo. And their executives were just make an offer. And we were like, dude, we don't want it. And they're like, just make an offer. So that's why we came back with the number, because we knew what it was built for. We kind of knew some vague stuff about it. We were just like, dude, we'll spitball something out. And we genuinely just didn't think that they'd even entertain it. And they were no negotiation back. They're like, done.
Cool. Cool. So with that, I mean, was that for you guys? Were you nervous? Like, oh, it is COVID. I don't know what's going to happen. Let's just underwrite this at like, if we got it, we'd feel good about it. Or were you bullish on, hey, things are going to bounce back?
We underwrote it from a place where the offer was just like, dude, there's just no way we could lose on this. And that was why we didn't think they'd take it.
Yeah.
But we also do know the area really well, and it's the community we live in, and we know the culture, we know the political layout a little bit better, and so we had pretty good faith that people weren't gonna just like shut it down forever,
Yeah.
and that the
Yeah.
business is a little more old school area, more like kind of like conservative Midwestern United States area.
Yeah. Cool. And where was it?
So it's in Kearney, Missouri, which is where I
Missouri.
actually
Cool.
live. Like, and it's got businesses in it that, I grew up with, and we know the whole community super well. So we definitely had a lot of hedge on the risk.
Yeah. No, it's great. I love that. And I think that's, too many people go in with thinking the best case scenario, cause like, yeah, we can hope things are going to bounce back quick as much as we want, but they don't, they might think, oh yeah, things are gonna be back to normal next year. So I'm going to make this investment and underwrite this based on things being back to normal, best case scenario. When reality is it's like, no, you hope for that, but you also want to look at things, worst case scenarios is still pencil. So I think that's phenomenal the way you guys did that. And I also think too, this is something I've been thinking about a lot just in general, this concept of like the long game, right? And like Warren Buffett, for example, his first stock he bought, he was 11 years old, like such a young age, right? And obviously, I think that's led into why he's known as like one of the
Yeah.
richest people in the world, right? But just this concept of, and he preaches this, is it's the long game. I think too many people try and like, you know, hit gold, and I want this shiny object, and I want the quick, fast, this, that, and that. But it's like, hey,
Mm-hmm.
no, I know that if I do this the right way, and you make your money when you buy, not when you sell, right? So up front, I'm gonna have this long term outlook on this thing, not like this quick shiny object. I'm gonna make $1 million. And I think if you go into it that way, which is the way you guys did, you ended up making $1 million. But what did you get it for? What was the price?
We got it like right at $1 million, which
Wow.
is, I know it sounds crazy because people are over the place, but it's in a little bitty area, the Midwest United States. It's 12 units, and nobody freaking wanted to touch it.
Cool. Cool. So great timing there too. What
Mm-hmm.
not to chalk it all up to timing. I hate when people do that. It's just like, oh yeah, you got lucky on your timing. Because it's all the other principles that added up to it. But how did you fund it then?
Yeah. So the historically, right, this is just me and my partner, my dad. Like we had the funds for that type, which in that type of commercial deal, like it's not a crazy amount of capital needed to pull it off. And we didn't have to raise anything. I mean, we just self funded it from our key, our core active incomes ourselves.
Cool. Awesome. Awesome. And I think it's always important to point out too, like, dude, if you're listening to this, you're like, well, I don't have, $1 million to go buy cash for a property. I'm gonna check out. Like that, I just love pointing this stuff out because it's not the way that it works, man. It's like, I promise you, like Ty in this situation, if he didn't have that, he would go figure it out. He would raise the money, or he'd go get hard money. And guess what? Who cares if you're paying 100 grand for that money when you're making 900K from it, So Cool. Love that. And then at the end of the day, like we've talked about a few different things, the way you forced it and kind of got creative with it. But was there anything else that you would say like, oh, this is how I forced this deal and turned it into, $1 million plus bucks?
I think the most important thing in this one, and the reason I like it so much, I like to share it with people and figure to be a good one, is just this is a crazy time. A lot of people weren't doing deals. We were, and we weren't looking for this deal. We were looking at different deals, but being in a buy mindset and like, no matter what's going on, we're still playing and like, we're being
Mm,
aggressive. We stumbled upon a deal like, and at the time, right, we submitted an offer not to go make a home run situation.
yeah.
We did
Yes.
it to make it a not lose situation. And it just,
Yes.
because we were so aggressive and we were still abundant, like that, I think would be the principle of like, it then turned into a killer situation that begat a lot of awesome opportunity for us very quickly. That chalk it to timing, whatever, but we got the timing because we were playing when nobody else was.
Yeah. Yeah. 100%, dude. Yeah. So, man. Yeah. Yeah. I think that's amazing. Not to keep going off on analogies, but like it's like that with the gold rush, right? Like there was a guy, I think his name was Samuel Brennan, but like his concept, why everybody was like, oh, I'm going to strike gold, I'm panning for gold. He was like, I'm going to buy the real estate and the tools that people are using and that need to go in and buy gold. And so as they flock to these places, like he was, hey, I'm going to play the long game. Maybe I'm not going to like strike gold and get this 1,000x return like some people did, right? When they did strike
Yeah.
gold. But I'm going to play this like safe, long game, same principles, day in and day out, consistency. Like I know what I want. And then what ended up happening? Like maybe he didn't strike gold, but he did better than 99% of the people that went out and lost their shorts, right?
Yeah.
So fundamental principles and just sticking to that. I love that. Anything else, like kind of wrapping this one up? If somebody were to ask you, just like, hey, how can I go replicate something similar to what you did, Ty? That's a cool deal. I want to be involved in something like that. How do I go do something like this on my own? What advice do you have?
Um, I think if you just commercial in general, if you want to get in the commercial space, that it's in my opinion, I think it's easier than single family for certain things, but
Why do you
it
say
is
that?
easier. I think if you understand business, and there's a lot of things in the commercial space because they're valued as businesses, there's a lot more data that you can use to, in my opinion, like not speculate at all. It's,
Mm,
you can really eliminate a lot of guesswork based off of just revenues and bottom lines and what the competitors in the space are able to create. And you can
mm-hmm.
identify gaps, in my opinion, a lot easier. And you don't need the same financing structures like the banks that are supplying the loans for these. They're looking at them at businesses. So it's easier to validate. It's easier to get funds in. It's really easy to prove or project pretty justifiably to an investor why it's a good deal, why it's safe, where it's at already.
Yeah.
There's a track record in these properties
Yeah.
generally. There's a track record in these assets and in these type of businesses and in these consumers. And so I just
Yeah.
think you do have to learn business and you do have to get maybe a little bit more financially like savvy with balance sheets and income statements and things like that. But I think once you do, I love them. I think there's just more you can use to really justify your purchases.
Yeah. Well, and just to kind of like touch on that for people that are listening and they're like, okay, what does that even mean? Right. I think that
Yeah.
if we only understand single family, the way that that works when they go and appraise a property, they're looking at what other comps have appraised for or have sold for, right? So it's
Mm-hmm.
valued based on what the market's telling you that it's kind of worth. It's completely different when you go to commercial. They're not valuing it as much based on, oh, this other, commercial building sold for this much or this other apartment complex sold for this much. No, they want it. They want the math. They want the numbers. So if you can
Yeah.
show them and say, hey, it's renting for this much money, and if you buy it and you go in and you raise rents, right, for different reasons and getting creative, the bank's not going to say, okay, just because you raise rents and didn't go in and do anything to the property, it's not worth anymore because it still aligns with this comp over here. No, they're going to look at it and say, cool, this is the rent roll. Sweet. Now this property is worth this much more money. And I think that for you, that's one of the things you said. It was, 60% occupancy, and you came in, you were able to get it to 100. I'm sure you even raised
Yeah.
rent too.
Yeah. I think I explained it to somebody the other night. I think this just makes the most sense. When you're doing single family, so much of your projections and what the market on, like what you go exit it. It doesn't matter what your Airbnb rates are. It doesn't matter how well you're getting the asset to produce. When it sells, the product was designed for homeowners. So it gets
Mm-hmm.
evaluated based on what a homeowner would pay to live in it when
Mm-hmm.
you exit. But
Yeah.
these businesses have multiple on the income they produce. And so that's what they want to see. How effective is the business? How profitable is the business? And what's the likelihood I'm going to buy an income producing business that's attached to this physical asset? So it's a different lens.
Yeah. Yeah. Great way of explaining it. I love it, dude. Well, we're bumping up on time. We just try and keep these ones pretty short and sweet, but I know a lot of people are going to have some follow-up questions and just want to connect with you in general. What's the best place for them to do that?
I'm probably the most active on Instagram, just at Ty Thorne. And I love to chat and chop it up with people. So you can just DM me and I'll hit you back for sure if you have any questions.
Sweet, dude. Well, you're the man. So much love for you, dude, honestly. And yeah, just excited that have you in my life to bounce ideas off with and just to connect with. It means a lot. So much love, brother, and we'll catch you on the next one.
Appreciate it, man.